much since the end of the Second World War, we've all assumed that we're going to be in a world of greater global cooperation, whether that's political, cultural, economic, military, whatever. And now, post-Trump, post-Brexit, that question is really starting to be challenged. And I think when you look at global industries like finance, and in particular futures, that's potentially quite worrying. Because, particularly with futures, it's based around global commodities, currencies, rates. And so the idea that you've got different national regulators trying to diverge in terms of how they're interpreted does two things. Firstly, it increases the friction for everyone in terms of participants to be involved in the industry. And secondly, it runs the risk of creating more systemic risk in the industry as a whole, because you get these gaps in the regulation. And you potentially end up with a bit of a death spiral where you get a problem and then you get another retraction of nationalism around regulation, which actually makes the problem worse. What you can see very clearly in Europe is we're implementing MiFID 2 in Jan 2018. There'll be a MiFID 3 to correct the unintended consequences of that, and 4 and 5 and so on. Whereas in the US, we're seeing a bit of a stepping back from some of that regulatory reaction to the global financial crisis, certainly perhaps with the Volcker rule being reinterpreted or maybe repealed completely. And that does start to open up some gaps. And I think for us as a firm, we've had to think very hard about, as a global firm, how we manage that for our clients. I think there's 2 points that we're focused on. The first is very much, we took the decision 10 years ago to build out our own regulatory practice within Fidessa, so that not only could we understand what the rules meant, we could be part of the process of their interpretation and the rules being made themselves. And what that's led to is a bit of a safety in numbers, because it's a pretty brave firm that says, I'm interpreting the rules this way, so I'm going to behave completely differently to everybody else. So our regulatory practice has been all about getting consensus. And then I think the second thing that people are moving on to is it's no good being compliant with all the rules if you can't make any money. And so a lot of what we're doing now with the new software and products that we're rolling out is how firms can position themselves to actually take advantage of the new landscape. And so I think what you're going to see is a lot of the largest firms have implemented their regulatory infrastructure, particularly for MiFID 2. Some of the smaller firms are saying, I'm not quite sure how it's going to work out, so I'm going to wait. I'm going to wait for some precedent, and then I'm going to scramble to follow that precedent. So whilst Jan the 3rd is the date for this MiFID 2 stuff, what you're going to see is a whole year's worth of interpretation and events, and the industry then will settle on something that the regulators are happy with and its participants can manage too. I think the thing that's most interesting is how, if you look at how the electronic market makers like Verti are starting to step around the exchanges and the broker crossing networks, which will soon be banned, and plug their liquidity directly into the marketplace. And I think that's a very interesting development, because you might see these new breed of SIs actually become the venues of the future.